right, everyone, how you doing? It's Mike, and I do have the recorder going for this, and wanted to go over what Kevin was looking at and how we figure that out. And so, Kevin, if you could tell me what you put together a broken wing fly in Disney, and you wanted to know how you could make that assumption on where Disney was going to be trading when it got down there. Let's get a chart. I'll bring a chart in here. We got that, and actually we don't even need that. We can just use the chart in here, and let's make this Disney. So Disney's lows on today were, we closed on Friday at 134.33. 134.33, and the low, let's just say that we opened up on our lows. The low were 132.30. So the question was, now you're playing this for earnings, or I'm trying to figure out exactly, or were you just trying to buy it? I mean, they do have earnings on the 8th, which is Wednesday after the market, but you were looking to buy on the dip. And essentially what it is, it's really just a delta play. So what were the strikes that you were doing? These were the 510. So Friday's expiration. The 34, 40, 42. So 134, 40, 42. So you have a $6 wide call spread in the front, and then a $2 one in the back. Okay, and here we are. Disney is actually trading up about 65 cents. So we're going to be pretty darn close to where this thing would have been trading on the close. So it was probably trading somewhere in the neighborhood of $1.80 on the close on Friday. And you sold it or you bought it? I'm assuming you bought it. You bought it, right? Exactly. Okay, so you bought it for $150. So on the lows, we would have been approximately $2 below. So what you would do is you say, okay, so if this has 20, and this is going to be an approximation because we know that the delta is not a static figure. So the delta, let's just say that the delta is probably somewhere in the neighborhood of 25. We have a $2 move, and so that delta over the course of that time would have been somewhere between 20 and 25. Hey, Scott. So let's just say that the average delta through that move was 24 cents, 23 cents. Let's just say 23. 23 cents for a $2 move would be 26 cents. So if it were trading $1.80 on the close on Friday, you would expect it to trade $1.80 minus the the 46 cents. So 46 minus 180, right? So that's 132 or 34. So 134 is probably, if you bought that on the low and everything else being equal, like I said, implied volatility probably ticked up a bit, but that would be so a $5 change. If we had a $5 change. Now, of course, the delta is going to change a little bit here as we move because of gamma. But this is what, let's see, this is what this looks like today and what it looks like on the 10th. So you can see that, here our delta is, we're long 26, and then as we get closer to our short strike, then our delta is actually going to decrease. But this is the move that you're trying to grab in here, this 4% move. So I think if you had bought those on the lows, getting that for anywhere between 130 and 135 would have been an excellent fill. I think you said that you bought it for 150. But I also think that if you were saying that you were trying to buy it for, like, what did you say, 80 cents originally? That would have been too much because we weren't that low. We only opened up down a couple of bucks. It's actually up on the day now. What would I say is a wise GTC? What are you trying to do? Are you trying to exit it? Are you going to do it before earnings, or are you going to take it through earnings? Right now, the market is 195 mid market. Well, wait, what do you mean? Yes, I asked if you're going to take it through earnings or not. The most you could get is $3, then sell it. No, that's not true. What's the most that you can make on this? Here's the trading tool and our spread calculator. This is the 34, 40, 42. 134, 140, 142. We're going to buy one of these. We're going to sell two of these. We're going to buy one of these. And we paid $1.50 to get into it. So the most that you can sell it for, or where's the best place to go? I'm going to tell you. It's in the documents tab, Kevin. So you can make $6 if we go to 140, and of course this is at expiration. So if we go to 140 tomorrow, this is not going to be trading for $6. No, the best would not be below 140. It would be at 140. Anything below 134, these are all worthless, and we pay our $1.50 to watch that show play out. We lose. Then, as we get north of 134, now that, no, 140, 139.99, that's fine. Then you make $6 on the spread. You lose $1.50 because you have to pay to watch the movie play itself out. You make $4.50. But like I said, that is not going to, that is at expiration. This isn't going to be trading for $6 if we go to 140 today or tomorrow or Wednesday before earnings. But if this was done specifically for earnings, well then that's a completely different ball of wax, so we got to watch it play out. I didn't bring up the other thing, that if we continue on through 140, nice work, David. We continue on through 140. Well, anywhere from 140 to 142, it's still okay. It's not ideal, because then now we're giving back two of those bucks that we made. So we only make a net of $2.50. Still a decent return, for sure. But as far as what a decent, if you make, if you paid $1.50 and you want to make 50% on it, well, then putting a $2.25 offer out there is reasonable. If you pay $1.50 and you want to get a 70%, well, then $2.55. Then of course, if you take it through earnings, then who knows what's going to happen. Correct. If Disney stock goes down, then your butterfly is going to lose. So as it stands now, we're trading, so you have 40 cents in this thing. Right now you're looking at about a 27% winner. Probably not where you want to get out, especially since it's looking strong in a market that has been weak today. But that's how I would approach it. Well, yeah, I mean, your question was, is it better to sell the news on late Tuesday? Well, it's Wednesday after the close. That's the 8th. But you're asking me to look into the future, and I don't have that crystal ball. And I don't know what Disney's going to do between now and then. It could go down before then. It was down earlier today. It could go down anytime. So then it just becomes, okay, probably what I would be doing is, I wouldn't want to lose any money on this trade. We already said that we have 27% in it. So I would let that, I wouldn't want to lose any money. So if we start trading down to where this thing is worth $1.50, maybe I'd just scratch it and, maybe hope that Disney goes down on earnings and I can buy it again if you're bullish on Disney. Yeah, I don't necessarily disagree with you, Kevin, but I don't know that. There is no guarantee on any of this. All right, but you got a good trade on right now. All right, I'm going to go back to the other things. Scott's in here clicking around. I don't want to fight with him with the mouse. We'll catch you later.